Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Wednesday, January 17th. Today, it's really a big day in all around the world because today we got in UK the inflation rate and it ticked higher the same way that in US we ticked higher, in the Eurozone we ticked higher, in UK we also ticked higher. And the fears around inflation getting sticky are increasing not only in UK and Europe, but also here in US. And that's why we've been feeling like a very price action throughout all the days and selling pressure. And I think the move down, not only respecting certain inefficiencies to the downside, but also invalidating the bullish fair value gaps. We are going to see that into the charts, but also take a look at this NBA 30-year mortgage index data. Mortgage application spiked 10% again, and rates keep going lower, not super lower, but I think households are eager to really refinance, look at this index, and also apply for these mortgages at lower rates. But I think another thing that affected the markets, apart from the UK inflation reading, it's also retail sales. After Christmas, we were waiting for December reading on retail sales, and look at this 0.6%. We were expecting a little bit of an uptick, 0.4, but we got 0.6, way more than expected. And it's all across the board, excluding autos, excluding gas, everything points towards higher prices and inflation getting stickier. And that is affecting the aggressive rate cut path that the markets are pricing in. They are still thinking about that. They still think that the Fed is going to rate cut 6 times this year. The only change that we got is we moved from here to here, and I think this still markets are getting ahead of themselves. That's my opinion. Some analysts are also pointing towards that, and I think this is too much of rate cut path. But well, that's why you have to really be patient and wait to see the data. And this data is not showing the Fed what it needs to see. So let's now move on to the technical analysis, because as I'm going to show you, yesterday was a pretty big day for a move towards this liquidity. Now that we bounce off this fair value gap bullish on the 30-minute chart, this is the 30-minute chart, during the open into the London Open, we basically dump all yesterday's move and more. We bounced and then we open with a lot of invalidations towards bullish inefficiencies. As you can see, this was pre-market low. We invalidated these 30-minute and 50-minute fair value gaps. Let's see the 1 hour. The 1 hour got also invalidated. So I think the first thing that I'm thinking about this is be careful. Be careful, because this is not bullish price action. In order this to be bullish, we should have respected this fair value gap for the second time on and don't get me started. We should have not even go down into the pre-market session. We should have cleared this fair value gap, this liquidity up here, but we didn't. So if we check on the pre-market action, that doesn't mean that there's no opportunities, because we dump on the UK inflation reading, we took liquidity. I was not super confident on this, but I wanted to risk it because we didn't take this liquidity down here, but we double bottom almost this, and we started pushing higher. And I basically took this 13-point risk reward ratio, 1.75 towards this internal draw. And because I think at some point we were going to, if we were really bearish, shorts were waiting for this to be the point of rejection again. So I wanted to take this move higher. That was 23 points. I just wanted that. You don't need way more than this. So I was happy on the pre-market, and I was just waiting to see it. Are we going to take all this pre-market liquidity, or are we just going to dump? Then, right before the open, we took the liquidity here, we trapped a lot of longs, and then we dumped it. We dumped it, and since then, oops, I took a second trade against my, what is appears to be the bias of the day. It's to be basically a V reversal, but I was, there's no floor here, there's no liquidity. So we could just go lower, and that's why you have to really manage the risk. I took this scalp because why not? I mean, the only thing that is lacking is the liquidity down here. I like to trade this move into a fair value gap. There's no liquidity grab here, but we got this fair value gap respected, and the trade is, as always, you know how I trade. The liquidity grab here, and that was 51 points. So today, more than 1,000 profits, almost 1,500. And the only thing that I would like to highlight about today is that if you are short, be careful with this, because market keeps leaving these relatively equal highs up here intraday. We are consolidating up here, and we are now moving towards again this up. I don't think high of day today is gonna be here into the afternoon. Today we are more bullish than I was initially expecting into the pre-market, because this move was really, I mean, we just, this is almost as an A plus setup can be. This was really nice long with really nice trend. The only thing that is missing is that we are not taking all the liquidity up here for the short opportunity. So that's why I'm saying be careful, guys. If you are short, be careful, because I don't think these highs are going to be here in a couple of hours. So if you continue trading, watch that, and then watch, I think this is quite visual attractive for the manipulation, and then finally these pre-market levels. But don't be greedy. Remember that prior lows were down here. We are out of range of yesterday's, because we are way down below. We are just doing a V reversal. That doesn't mean that we are green. Look at my run height side. Look at all these red. These are the Magnificent Seven. These are the big tech stocks, are all in the red. Dollar keeps chopping around, but it's in the green. The 2-year yield is just spiking higher due to basically the expectations of the lower interest rates that are now being adjusted. So look at this big reversal in the 2-year yield. The 10-year yield is also in the green. Treasuries are barely in the green. Russell is down 1%, and a lot of banks, look at this, banks are not liking these earnings. So remember that expectations, and more than that, growth is what Wall Street is looking for in this Q1. So even though we are not bullish, that doesn't mean that this is a short. I don't think this is a short. I think this liquidity is going to be grabbed at some point today, and then we might need to see where we end up today. But for now, my job is done. I was pretty bullish in the pre-market, but this dump just changed my bias. I was not looking for shorts. I am not a short bias trader. Very rarely I take shorts. I won't take longs because the market is basically crafted, is created to the upside. So that's why I always wait for my opportunities. There's always opportunities. Almost today, 1,500. And that's pretty wild for me in this move without taking any shorts. So be patient, be disciplined. Remember that this liquidity up here is very attractive into the power hour. And certainly after that, watch for the lows, because I think overall, the structure in the 30-minute chart points towards the downside. This pivot down here These pivots down here, there's a lot of inefficiencies. There's a huge 30-minute chart fair value gap down here. And I think at some point, with this bad data that we are getting in the economic and fundamental side, I think we are going to see lower at the short term. So be really careful today. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Everything and anything can and will happen in the markets, but risk management and discipline are your key for your success. Stay safe, everyone, and see you tomorrow.